Okay, so we understand that our stop loss is at the 1, right? Your entry, well, this is perfect, right on the 702, right? Your TP1 is going to be that first 1-to-1 ratio. Right, so let's say sheesh, I'm on a large time frame, but it doesn't matter. So 350, right? That's about 350, right? You get the point, right? Whatever I'm risking, right? A 1-to-1 would be the equivalent to what I'm risking. So if I'm risking $200, right, I'm gaining $200. If this chart, if I get in, at this 702 and it pushes up and I'm hitting my 1-to-1, right, that's my TP1, right? That's first take profit. Your first take profit is going to be a 1-to-1 ratio. Now, if you understand this model, you'll start to see that this goal, or where this zero as, tends to be it tends to be a 1-to-3, right? At this zero, this is where it's usually triple the whatever amount that you're risking, right? So the goal is, right, your first goal before anything is a 1-to-1, right? You want to at least secure a 1-to-1 in these trades. Now, sometimes you'll have a situation where the chart will react off this order block, right? And it'll do like this and reverse, right? This is something that you, in this case scenario, it's not the fact that you did anything wrong. It's not the fact that the trade, of course, the trade didn't play out how it was supposed to. However, by you at least securing a winning trade is at least a 1-to-1 before anything. Now, this model, 9 times out of 10, you're supposed to be targeting a 1-to-3. However, when it comes to trading, you can only predict the market up until a certain point, right? The reason why we're entering off of this order block is because that is essentially our shield, right? So I'm going to just show you what it looks like right here. Boom. This gap, right? We know the order block is the last down candle before the up move. It came and touched this order block and shot off. This is like again, it's a shield. It's like a bouncy ball or whatever. It just deflects. It deflects the market. Taps it, bounces away. Taps it, bounces away. This is why our pending order is right here. Right now, what this does is this protects your account more. Number one is because it has less risk. You're trading off of a shield. And like I said, you're trading off a shield. And then for this scenario, we also have a fair value gap right next to it. That also, if we're understanding the rules of a fair value gap, we know that price likes to fill these gaps, which it did, and then reverse. So now we have a double shield, right? If we just had an order block, yeah, that's cool. But having a fair value gap next to our order block, it's like a double shield. So it's like boom, boom. I have two things going for me, right? You can enter off the 702. Did the trade still play out? Yes, it did. If you was to enter here, you just had a deeper retracement. However, this or entering the market off this order block protects your account the most. It lowers your risk slightly a bit. Sometimes that chart will come to the 702. It won't even touch an order block or a gap. It'll just come to the 702 and push off. That 702 is highlighted for a reason because that is the most optimal price that the market likes to pull back to and then react off of. And that's just through a series of back testing and studying. Like, okay, yeah, it doesn't always come and touch this order block, or it doesn't always come and fills the gap. But 9 times out of 10, it usually comes within this area right here and shoots off. So if you're okay with that, then yes, you can put it at the 702. But the goal in what you're actually doing here is entering off that order block. And that works so well with this model because your entry is down here, right? Your entry is not up here in the middle or up here up top. You are protecting yourself the most by entering off that order block, and you're guaranteeing yourself a better risk to reward ratio. Does that make sense? Everybody see that? Cool, cool, cool. So now, how do you know when the chart is going to do well? Again, you can only predict the market up to a certain point, but how do you know if a trade starts consolidating, right? Versus it's going to fulfill this, that 1 to 3 is going to make a new high, right? So let's look at yesterday. So where was it? Where was it? Where was it? Boom. So in this scenario, right? When you see this, you have to understand that if you are entering into a sell, you have to, it still can give you a powerful move. However, you have to protect yourself way more, right? You have to be more cautious because essentially you are trading against the trend. We already looked at the 4 hour and we saw, okay, we just broke structure to the upside. We should be making a new high. Now it didn't do this until this first half of the day. Last night we were down here, right? And then when we clicked on the 1 hour, we could tell we had just closed below this low. It was in this area specifically. So we closed below, right? Understanding this, we should be in a downtrend. Now, at this time, when I saw this, I said, okay, we just closed below after we tapped this order block. So I'm like, okay, this could be a great opportunity for a sale, but I know on my 4 hour, the higher time frame is bullish. Now, on these higher time frames, these pip counts is very, very different, right? This whole move was 900 pips, right? It's $9,000 on one contract. It's more than enough for a trade. Like honestly, you could trade that for a day and be good, right? Even on the 4 hour, it's like, okay, understanding that these candles, the value amount of one of these singular candles forming is still insane, right? This one candle is 322 pips, right? It's $3,000 on one contract. So when it comes to understanding yesterday's trade, right, this first entry was right after that break of structure to the downside. In this zone right here, where we got this close below, following the rules, right? We was in an uptrend, then we closed below, right? We pulled back to this gap, 50% of this gap, tanked, right? Had multiple things confirming why we should be in sales. Now, here's the thing. You can't, when it comes to trading against the trend, those are not trades that you necessarily want to hold. It'll give you an entry and it'll give you that 1-to-1, but it's not the same as trading this. Like when it comes to trading with the trend, you can literally divide it like this. And these are I go over this concept in the 2 new videos. It's called understanding swing points, swing highs, swing lows, and then using the fib with your swing points to understand where you're trying to actually enter the market at. And so when it comes to, we understand that, well, again, you probably, I can talk about swing points a little bit. So understanding our swing points is literally going to be at this lowest point right here and the highest point right here, right? We could draw this on our higher time frame to see that. We broke structure, low to high. This is all a range within a range. Does everybody see that? When we clearly broke to the upside, all we're expecting is this. But we started consolidating and we're understanding that, yes, there's no real there's not a new high that was formed until we got right here, but we still respected the higher time frame. So we understand that this is all the range. Now, when we broke to the upside and you're looking for buys, the area in which you want to enter trades at is here and here. You want to catch it. You either want to catch this uptrend, right? After we close above this high, you want to catch this or catch the move after it hits the order block or the 702 on your higher time frame. You don't want to be in this. And I will show you guys exactly what I'm talking about. So we got these two areas highlighted after we marked up our swing low and swing high. We go to the 5 minute. We'll see, right? If we can catch an entry, right, after we broke structure to the upside, which literally it looks like it's one right here. This is another swing point. No. When you learn more about swing lows and swing highs, you'll understand why I drew it like that. But I won't go over that for now. I'll just keep it to the basics. So even then, right, understanding where we want our entries to be at. All in here, this buy side, after we close above, that's the entries that you're looking for. This didn't provide a clean entry. We'll still look for other ones to see if it did give a clean entry. Two candle close here. We got something. This looks like it's out of the zone. No, this is clean. Boom. So we got our valid low right here. Multiple order blocks came, touched the 702. We had a gap in here. Everything was here. This trade, 900 pips. Right? That's after understanding the two areas in which you want to catch a trade in. When we're looking for buys, right? And I'll just draw it on here to clear us up. The area that you want to enter, you're looking at, this is your target. Like this is what you're trying to catch. You're trying to catch the pushes up. You're not trying to catch the pullbacks. These pullbacks are limited, right? The pullback, it can pull back to here. It can pull back to here. It can literally look like this and it's still an uptrend, right? Your uptrend is defined by making higher highs. It's not defined by the lows. So your goal is to catch these moves, right? The push up. Your goal is not to catch the pullback. So if we highlight these areas, right, after we mark up our swing highs and swing lows, we'll understand that the two areas that we're looking for trades is here and here. And if we see, right here, when we was in our zone, we had a crazy good play. It's probably multiple buy entries all in here. And then again for here, after we touched this 702, started breaking structure to the upside, it's probably going to be another entry in here somewhere. This looks like it's it. Let's see. Oh man, this would have missed you. This would have missed you. Dang, that looked good though. We got another one right here. All this is liquidity. This is liquidity for your entry. Came down, touched it, moaned. What time is this? Early this morning. I mean, it literally kept doing this same type of thing. Order blocks in the zone, valid low, gaps in here, touched it again. Nah, a third time would be crazy. And this is probably cleaner on a higher time from now. These are all singular candles. This is another. Nah, I won't mark this one up. This is a little confusing. But when you understand swing points, it makes it very, very easier to understand why I'm marking it up the way I'm marking it up. But here, there's just reason like this, and there's reasons why you just want to be so patient when it comes to trading. Like when you analyze the market up until this point, you see, okay, I'm maximizing. Like the goal is to be super, super efficient, right? The two places where you're working to be the most efficient as far as looking for the buys, and this is the start between the 18th, right, to the 19th, right, and then from last night to this morning, pretty much, or the current time. Those two zones is when you were looking for the buys and that supported structure on the 4 hour. And those two days in and of itself gave you two entries where you probably wouldn't even have to trade for the rest of the week. And this is why I'm trying to show that, like, if there's like a super super clean entry, the probability of having a back-to-back entry that does just as good as the next entry is like slim. It's just slim. It's not the same, especially considering if you're trading in this versus trading in this. Now, if you're trading with this, it's easier to catch back-to-back entries. Now, when you're trading in this area or the pullback, then back-to-back entries slim to none. It could be all the difference between a play that's 50 pips and a play that does 20 pips, and that's rejecting off the order block. But these moves is the moves that you want to catch and the moves that you're looking for. And so, again, the easiest thing to do when it comes to trading is marking up that 1 hour and that 4 hour. This is what you guys should be doing, honestly, in your spare time. Like, if you want me to be completely honest with you, this is what separates you as a trader. Like coming to these 1 hours and literally, these higher time frames and marking up the charts and getting an understanding about what's going on, right? Tuning out the noise. I wouldn't trade in something like this. You're not looking for trades in something like this. Don't even force a trade in something like this. Something clean will come. Some type of clear direction will come. But a lot of people, especially starting off, they want to trade every single day. Don't advocate that. I see too many people, especially online, they're trading way too much. Way too much. I'm making more in how much they trade in one trade, and they trade 40, 50 times a day. That terrible. Like terrible. Terrible. You should not listen to nobody that trades like that, bro. Because that just means they pull anything. There's no real method to what they're doing. It's 50-50. I mean, it's gambling. It really is. The chart can either go up or down, right? If you understand market structure, you understand it's either going to go up or down. So if you're trading 50 times, that means literally you're rolling the dice. Like literally that's what you're doing. You have a 50% chance of winning and you just keep doing it. So it's like there's no method to this, like, or how people, if they're trading multiple times, there's no method to what they're doing. Anything goes for them, and that's not a trader. That's not the goal. That's not the purpose. It's not what you're trying to do, especially for futures. It's a bucket load of money in futures if you trade it the right way. You got to be patient. You got to be the person that says, like, all right, if I don't trade today, that is fine. That is okay. It sucks. It's not normal. It's not the normal. It's not what you see online. A lot of people, if they're trading every day, it's to appeal to people that like they trade every day. Like, but it's not. I'm trying to tell you, like, that's not where it's at. That's not where people that really trade and know how to trade, they're not trading every single day. Especially when you start swing trading, you're holding these positions. You catch one entry and you're holding these positions for days. You're literally like cooking and cleaning, going out, working out at the gym. Like I have uh, a brother-in-law that swing trades. He doesn't day trade, swing trades. Meaning he'll hold his trades for days. Crazy bread. Way like, and you got people that's sitting here trying to get on the charts every single day, trade, and ain't seeing a dime. Because really the most, if it's anything I can emphasize with trading, is less is more. Less is more. And if you can understand that, okay, I just need to catch one great setup. Well, really, if you're trading, if you're trying to pass the combine, I really need to catch two great setups. And that is it. And like I said, you according to this, just mark up the charts. You would have had one on the 18th. He would have had one today, early this morning. Been good, right? No stress, no nothing. No, you two good trades, you would have been straight. And mind you, this is on one contract. You can throw on multiple contracts. Oh man. And contracts is just multiplication. So if it's 900 pips, $9,000 with one contract, and you click it on two contract, jeez, that's 18K. Like trading gets crazy. Trading gets super crazy once you invest. And you got to invest in the knowledge, though. You got to pursue the knowledge. You got to be the person that's on these charts studying and not looking for the trade, especially in the beginning when you don't know how to trade. I know it sounds cliche, but it's like, don't look for the trade, because with your eye, you're not used to seeing what you need to see. So oftentimes you're going to be looking at the wrong thing. What I advise for people that's new and coming in, spend way more time studying than trying to trade. I know people got situations going on and they want to get the money super quick, and I get it. I understand that 100%. But with this trading, like if you want to get to the levels where this sustains you seriously, you have to be like, you just have to have that in you to study, to like knowing that is so like I think the hardest thing for traders or people that's trying to learn how to trade is literally understanding that there's a bucket load of money in this, but you cannot trade for the money. And as cliche as that sounds, it's 100% true. Like, and I'm like, I have multiple testimonies, multiple people that can tell you this. Like, even when even for this, right? For your account, um, I don't I know people like Top Step, the default setting is to have it on the dollar. I don't. I take it off the dollar. I put it on ticks. And again, I dropped that in a new video to change it. It's literally right here. You go to settings, charge data, switch it from ticks to dollar, right? Disconnecting. You want to disconnect from the money as soon as possible when it comes to trading. Like the quicker you can disconnect it from, like, okay, I'm doing this because, like, all right, ticks helps me see. Ticks helps me understand my ratios way better, right? So when I'm drawing up the fib, right, and I'm using my date and price tool, and I'm understanding, okay, if I was to enter on a 702, it's 400. It's 400 pips away, right? I'm gonna see that, all right, when my stop loss, it's not gonna say $4,000, it's gonna say 400 pips, right? So then when I'm moving my take profit, I know that a 1 to 3 would be 1,200 pips, right? So that helps you disconnect from, okay, I'm targeting a 1 to 3, or I'm targeting a 1 to 2, rather than, oh, I'm risking 400 for 800. It just, and this is something that I kind of caught on early, when I was first started trading, and I was seeing people that were passing their accounts and people that wasn't. The people that I saw passing their accounts were people that switched their accounts from dollars to ticks. And I was confused at first. I'm like, why they do that? They can't see how much money they making. Like that's how I was when I first came on. I'm like, you can't see. Like, what are you talking about? But then the more and more experience I got at it, I understood immediately why. Like, it didn't take too long for me to understand. Like, oh, this helps them disassociate from the money, and it treats it. You become you kind of step out of the realm for like trading with money for actually trading professionally, because that's what it is. Like, you can be a professional trader. Like, that can be your job. That it's not talked about. It's not talked about as like a career that people pursue, but you can be a professional trader. Some of these trading accounts, you have to get approved to trade on. Like, you have to have years of experience to trade on for people to even give you a trading account. Like, it's a real thing. And so to try to jump into that realm between, like, a recreational trader, quote unquote, to professional, the main key is disconnecting that self and understanding that, yo, I'm literally trading on the chart because I'm seeing something, right? Even with me, when I call out trades, honestly, this is what I want people to do. Every time I call out a trade, I don't want anybody to just pull the trade. I want you to mark up your chart, draw the fib, and see what I see. That's what's going to feed you. I don't even like the concept of calling out trades because I've seen how detrimental it is. I've seen how people just rely on the call outs. And I understand that people want to get paid, but I also see how hung up people can get on the call out. So I'm trying to find a balance between it, because I still want to call out trades for people, of course. But it's like my perfect scenario, what I would want people to do when I call out trades is literally go on the chart, draw the fib up, whether it's for a buy or a sell, look at where that pin and order is, where I call that price, and see, oh, is it right next to this order block? Is it within this gap? See where I'm placing the pin and order at. See if you can analyze the chart just as much as I did. That's honestly what people should be doing. And I know I don't think I voiced that for real. But that's how trading becomes duplicatable, right? Instead of just um, copy trading or taking signals, that is the key difference. Is that the growth here? I'm more so I'm an advocate for people to really really learn how to trade and not become handicapped traders. Um, because I've seen it. I've seen it time and time again where it's like people will say, "Oh, I've been trading for X amount of years and this, that, and that." You got nothing to show for it. I'm sorry. I'm gonna be the first person to tell you, all them years that you spent trading, you was not a trader. You was wasting your time. Because trading you should have some type of progress tracker or growth. Shouldn't be making the same mistakes twice, literally. Um, and that's just how you got to treat it. But yeah, let's see. We coming up 5:53. That's pretty much all I got. Anybody got any questions, comments, concerns? Yes, no. Cool. That makes a lot of sense. Cool. Yeah. We breaking it down. Yeah. I'm recording. Oh, y'all can come on. Y'all can come off mute for the recordings. I don't mind. Um, but yeah. Just again, keep finding ways to break it down, make it more simpler, get a real understanding of what's going on. Yeah, that's the goal. That's the goal for sure.
Yeah.
Uh,
Thank you. You talking about the 1 hour and 4 hour markup really set in stone, like what we really need to be doing. So definitely I wasn't doing markups on the 4 hour chart, just like as detailed as this, shall I say.
Yeah, this is what will change the game for you. I'm telling you. Like, you talk to anybody that really seriously trades, is doing stuff like this. Like, again, when you got the time to, you don't have to like oh my gosh, let me mark it like, but just make sure you're setting aside time to understand the charts. Like, not it's times where I'm not looking for a trade. I'm just on here studying. Like this last Sunday, the whole entire reason why I pushed the call from 5 to 8 was because I was on the charts just studying, and I was like, yeah, there's nothing that's happening at 5. And literally, when I was like, you know what, it's probably gonna come at 8, and the trade came exactly at 8 o'clock. But that comes from a level of study. And mind you, I didn't know that the trade was gonna come, from Friday or Wednesday. I literally looked at it right before market open. I was like, you know what? Yeah, I've seen something like this before. This is gonna come at 8, and that's literally how it happened. And so, what I know it sounds like, I know people be like, bruh, no, you've been doing this for a long time. Yes, but I'm telling you, the formula is doing this exactly what I just showed you. Understanding this is why you have to have such a firm foundation of the basics. Understand the trend. Understand what a valid high and a valid low is. Understand what a swing high and a swing low is. You have to be able to know these things so that when it comes to understanding a break of structure, my entry, like everything, structure is first before anything. Make sure you just understand structure before anything. If you still do not understand structure, right? If you don't understand structure, you won't be able to draw your fib correctly. If you can't draw your fib correctly, you don't know if your order block's in the zone or not. If it isn't, if you drew the fib, if you drew the fib incorrectly and you have an order block in there, that order block is probably not in the zone because the fib is incorrect. Then you're looking for a fair value gap that's technically could be anywhere up in that markup. And then you could be entering in liquidity because everything is wrong. That's why structure is so important. That's why it's number one before anything. If you don't understand structure, I'll mess up everything else. And I still sometimes see people have markups where they're still struggling with structure, which is, again, to be expected. Once you just start understanding the two candle close rule and understanding what's liquidity or not what's liquidity or slash consolidation versus what an actual trend is, the swing high and the swing high and the swing low will help you filter out the noise so much more. If you understand the nature of the chart, you understand swing high, swing low, you understand where my retracement should be, right? It'll help you tune out the noise, be much more of an efficient trader. But yeah. Yep. Anything else?
Not from me, thank you.
Cool. Well, all right, guys. That's pretty much all I got for this session. Again, people in the US will be back at 8 p.m. But other than that, you all have a great rest of your night.
Thank you. You too. Bye.
Yeah. All right.